Well, hello and welcome to another video from Retail Trader. My name's Simon Gray and I'm a retail trader. I trade the currency markets from home, 15 pairs at any one time. Normally I'm not in the market in 15 pairs at any one time, but usually 2 or 3 trades going off at one particular moment. And this video talking about a few things, then we're going to get into the markets. But first of all, I wanted to say, wow, FOMC last night, Federal Open Market Committee came out and said pretty much that everything is as expected. There was some narrative in the notes about the inflation being under where it should be. As a result, the dollar took a tumble. I was in a USD CHF Swiss franc short position. Dollar took a tumble in the direction of my trade, and then quickly I went to make a drink, quickly reversed the other way, and closed basically on top of where the market had opened the day. So quite an interesting move. Who knows why that happened? People read things in different ways, but the important thing was, according to my rules and my discipline, ahead of any major news event, what I try and do always is to roll my stop to entry point to break even. It's exactly what I did before the FOMC announcement. So when price did reverse, yeah, I had some profit in that trade, didn't capitalize on that profit, but the most important thing was that it took me out pretty much at my entry point, a little bit of slippage there, and as a result I protected my capital to trade another day. And I'll show you this trade in the charts. I'm now short again on that position for various reasons, and I'll show you what I'm doing when we get into the charts. Wanted to talk about a couple of things. First thing is about discipline. Discipline is the most important thing in trading, and what I'm really talking about here is self-discipline. People talk about psychology. I used to, I read all the trading books, still read a lot of trading books, and people used to talk about psychology, and I never really understood what they were talking about. I thought trading back then was all about, okay, I need the system that beats all systems. I'm going to win all the time. It's going to be a great ride. All I've got to do is to find the holy grail of systems. Complete and utter nonsense. Complete and utter nonsense. What trading is all about is discipline, which is self-control, self-assessment, self-evaluation, and I have a morning routine. I get up at 6 a.m. It takes me about 2 hours to look at all of my 15 currency pairs. I'm assessing them in relation to moving averages. I'm assessing them in relationship to one another, i.e. relative strength, and then I'm looking for my entry signals in line with my rules. And I have my down here, I have my trading rules, which I read on a daily basis to really drill that into my subconscious mind. So I know what I'm looking for, and I know when to enter and when to sit on the sidelines. And sitting on the sidelines is sometimes just as good a trade as being live in the market. The other thing that I wanted to talk about, which is the title of this video, is why the trend is not your friend. Now, if you're new to trading, even if you're perhaps more experienced, you probably heard this thing that the trend is your friend. And absolutely, the trend is your friend, providing we're in a trending market. A lot of the investment strategies where people hold on a long-term basis, that's all about holding for a long term. And as a result, people get this idea that the trend definitely is your friend. Sorry about that, just pause the video. It's one of the challenges of working from home and trying to record a video as well as trade. But my wife had just come back from the kids' school run, so I heard the door go, pause the video. Anyway, by the by. So talking about the trend. So the trend is your friend, providing we're in a trending market. But trending markets in the currency markets, how often do markets trend? Well, who knows, 20, 30, 40% of the time. But what is certain is markets don't trend all of the time. And one of the big challenges I used to have, I used to believe that the trend was your friend. So my strategy would be to buy a market that was going up or sell a market that was going down, and to try and hold it forever. And inevitably, quite a lot of the time, I wasn't in a trending market. I was in a ranging market or a consolidating market. And as a result, what would happen is, in the case of my buy strategy, price would go up. I'd think, great, I'm in a winning trade. I'd try and hold. I perhaps wouldn't be trailing my stop, and then price would drop at the top of the range, and what was a winning position, what was a profitable position, would get stopped out for a loss. And this was really, really frustrating, and I couldn't work out why this was happening, because after all, the trend is your friend. What changed in my trading and what really supercharged my trading to become a profitable trader was realizing that actually there are really two kinds of market. There are ranging markets where price is going up and down in a consolidating fashion, trying to decide which way it's going to go next in terms of the trend, and a trending market. And actually, consolidating or ranging markets are more common than trending markets. So what you tend to have is a trending market goes up when the buyers run out. Okay, you have what's called a distribution or distribution channel. This is where people are deciding what's going on, and people from under the market are getting out at a profit. Maybe there's new sellers coming to the market. Lots of things happening. And at that point, at some point, either the market will continue upwards or the market will go downwards. Similarly, when the market is dropping, you get to a base level where the market stops trending downwards. This is accumulation. This is buyers coming in. This is short sellers exiting, so buying back their positions. And at this level, the market may reverse. It may, it may start to trend back up, or it may continue the trend after a period of consolidation. So consolidation or ranging markets are more common. If you can identify these ranges, which is pretty easy to do, I use a day time frame to do that, then you can trade them either side, and I've had lots of success in doing that. And you'll see that when we get into the charts. You'll see that most of my current trades in play are a ranging markets and my range trade strategy. So when people tell you that the trend is your friend, there's a caveat to that. The trend is only your friend if you're in a trending market. If you're not in a trending market, the trend will be your friend for a little bit, but probably not for much longer. So with that said, let's jump into the charts and have a look what's going on. So here we are in the charts, and before I go through some of my thoughts and insights, just a quick caveat as always. I'm not encouraging you to buy or sell or even to enter the forex market. This is really for information purposes only, for novice traders to get an idea as to what trading is all about, and for more experienced traders to perhaps take some ideas, some inspiration, some thoughts from the way I approach the markets. Everybody's trading strategy is personal to them. It's different for them. So one of the worst things you can do is to try and copy somebody else's strategy. What you're really looking for is to understand principles of market structure and to develop your own trading strategy that sits in line with your personality. And that really means, how active you can be in the market, whether you want to hold short term or long term, how many pairs you want to trade, all of this kind of stuff. And I'll talk about trading personality and what that really means on a future video, I'm sure. So let's just take a look at this chart. This is US dollar Swiss franc. You can see on the daily chart we've had a really big push up here, and what I was noticing here over the past week, we were kind of consolidating at this level. The market didn't really want to push up any further. We got this ZX reversal candle here a few days ago, and I was short the market. I was short the market on a EMA crossover strategy, so a trend strategy, or this is a trend reversal strategy. Basically, what I'm looking for is for this this orange dotted line, which you can just see, to cross over the 50 simple moving average, which is the pink one. That's a signal to me that maybe the bias in the market is changing. So I basically got short here on this YX signal. This was my T26S trade. Got short here. This green line, where is it? Yeah, this one, I think. Yep, that one. Got short here. Sold into the market. This was doing really nicely yesterday. At around about 6:45 in the evening, I rolled my stop to break even. So my stop was here, rolled it to break even ahead of the FMOC, Federal Open Market Committee conference in the States. They were having a report come out, and there's always a risk that things may reverse on you when there's news. The market gets highly volatile, or can get highly volatile. What happened initially is the market dropped. It just missed my lower target here. Just ignore this target here. I'll talk about that in a moment. It just missed my target to take me out for half of my position in terms of profit. And then it reversed. No idea why. It was a surprise to me. Literally around about here, I went to make a drink, came back, and this had happened. But the good news is that I got took out on my entry. Okay, yes, this profit was given back. This open profit was given back, but it was profit I never took, so it wasn't mine. What was more important for me is to protect my capital. If I protect my capital, the money I have in the market, or to trade the market, that's the most important thing. So I was taken out for a small slippage loss, not a huge amount. I class this as a break-even trade. When the market's volatile, sometimes it can pump through or push through your stop, and as a result, you don't quite get out at your exit point. Anyway, came back in this morning at 6 a.m. and saw this Z candle still under the 50 simple moving average. The exponential moving average, which is this orange dotted line, that's the 10, and the 30, which is the black dotted line, still underneath the 50 simple moving average. So I sold here and put my stop here above this YX, 20 points above this YX candle. So at the moment, I'm currently carrying a little bit of a loss here. This dotted line is basically 50% of the way back towards my stop. If we get a close above the 50 simple moving average, or if the exponential moving averages start to cross back over one another, I'll either exit the full position or a proportion of the position, depending on what crosses what. And if we get to here, this is always my checkpoint. It's not my stop loss in the market set with my broker, but what it is a kind of mental point that says, actually, do I really still want to be in this trade? So I've got my target now. This is my live target. Effectively, I can delete this stuff now. This was on the old trade. So I'm working towards this stop now, this target now, to take off half of my position. And what you'll see is I've put that inside the range of yesterday's FOMC bar, let's call it that. So there is a higher probability, hopefully, that we may hit this. Once we hit this, then I'll roll my stop to break even. So I can get rid of this now. I won't do this while I'm recording this video, but effectively all of that is irrelevant now, and this is what the market looks like, or this trade looks like as of today. Entry point, stop point, 1-to-1 risk reward, take off half the position. Okay, so let's have a look at what else we've got. So Aussie dollar come down into the bottom of a range. You'll see it's tested this range once, twice. This is the third time. I didn't buy it here, but what I did do is I bought this morning on this candle. What I like about this trade, it fits my trading parameters for my range trade strategy, which I was talking about at the start of this video, whether we're in a range or a trend. What you'll notice is price touched here, it's then touched slightly higher. So maybe, I don't know, it's all about probability, maybe there's some upward momentum. But what I really like about this trade is we've got this even handle, which is the 0.7000 level, which has formed really strong support for this pair since the start of the year. So there is a probability we may get back up to here. I put my target to take off half the position just below the 240-200 simple moving average. So that's the Aussie. That's in small profit at the moment, so that's progressing well. I like to see my trades in profit fairly quickly. If they're not in profit fairly quickly, my assessment of the market, my assessment of the order flow in the market is probably not quite right. So it doesn't mean I'm wrong on the trade. What it means is my timing might be wrong. What I don't want to do is to hold a position for a long period of time that's going nowhere. It costs me in terms of my capital, not being able to deploy my capital elsewhere. It also costs me in terms of broker fees. Okay, so let's look at my euro pound trade here. So this is an interesting trade, and this is in a position now that is pretty much risk free. I think I've got £20 of risk in this because I've rolled my stop. My stop sits above the 200 simple moving average on the 240 chart. So what happened here? Sold here, sold again here when we closed below the simple moving average, 200 simple moving average, and I had a target based on my first position, which I sold here, to take me out of half of my position on that first position, of this first position, and took me out here. So this was triggered this morning, so made some profit this morning. Now the market's going to do what the market's going to do. We may come down further into the lows here. We may reverse. Whatever happens, this trade is a profitable trade. If we get down further, I get another YX signal or another candle signal, then I'll probably add to the position, providing my risk to reward based on where my stop is and where I think the market may go to is. I'll do that depending on what happens as we move forward. On the daily, you can see this. You can see this quite clearly. This range. You can also see that we are now below the 50 simple moving average on the day. The 200 simple moving average is pointing downwards. So really, I think, and I don't know, but I think, you know, a bearish momentum, further downward momentum on this pair. Pound yen, again, this trade has been a profitable trade. I've hit my first target. The stop is at break even, looking to push up here now. We're getting stuck a little bit under the 200 simple moving average. We'll see where this candle closes at 10 o'clock. Again, I may add to this position if we get some upside momentum from above this simple moving average. That will then become, in terms of my strategy, will become support and gives me a good place to raise my stop loss level, my trailing stop, to protect profit that I have between here and here already on the other half of the position. What else have I got? Yes, pound Aussie, very similar to pound yen. Already made money on this trade, stops at break even. I'm looking to see further upside momentum. We've got a little range here that developed overnight. What I'm looking to see is that push up further. I'll then raise my trailing stop below here, and if I get an indication, maybe a candle signal, you know, XY candle signal or whatever, then I may add to the position here. I have to be cognizant of the fact that I'm long pound on this trade. I'm long pound on this trade. I don't want to be too exposed to the pound, so I always assess my correlation risk. And there is news in the UK at 12 o'clock, so I will definitely be raising my trailing stop before that news comes out. So at least I've locked in some of my open profit in case the market surprises everybody, reverses, or whatever else happens. It's part of my trading strategy. Before any major news announcement, I'll try and tighten my stop as close as possible to lock in my profit or to minimize any loss. Both is the same thing. Okay, and then finally I have my Swiss franc Japanese yen trade. It's one of my favorite pairs. These are the risk currencies that people tend to buy when the market is uncertain. People don't know what is really going on, or there is, you know, a kind of, if people aren't buying the Aussie dollar, they're not buying the pound, they're not buying the euro, they're probably buying these pairs. So they tend to work in quite a uniform way, I always think. I mean, look at this. If you'd have sold up here, which I did, I got out about, I think, here. The market continued to trend downwards, and then I got in again here. And I'm just waiting to see what happens, whether we can push down into my first target. We're still below the 50 simple moving average on the 240 chart. That's what I like to see. I like to see the exponential 10, the exponential 30, and the 50 in line, providing the 10 doesn't cross the 30. Or if the 10 does cross the 30, I'll exit a third of my position, no questions asked. And if we get above the 50 simple moving average, I'm looking to get out of the position because things just aren't working out. And that's on the close of the candle. So you'll see this candle here, it traded temporarily above the 50 but then closed below. So that's a good indication, I believe, of further downward momentum. That's why I have a stop with the broker, but I may exit manually if we close above and we hold that close. So yeah, that's really a wrap up from the markets, and yeah, we'll see what plays out. So I hope you found that useful. Thank you for watching this video. If you've liked what you've heard, like what you've seen, please hit the subscribe button, hit the notification button, and you'll be alerted to when I'm putting out more videos. Putting out usually a video once a day, once every couple of days, depending on what's going on. But hopefully you found this useful. And until next time, trade well, and I'll talk to you soon.